As investors, we love tech stocks. Tech stocks often give us a chance to invest in something that is revolutionary and really be part of something that is very exciting going on in the market, going on in the economy, and often going on in our everyday lives. Just think about some of the big names that we love right now. Tesla. Tesla is an amazing company, revolutionizing the car industry, making the leaders in electronic cars, self-driving technology. NVIDIA is another one. NVIDIA is a great chip stock, computer chip stock, that is basically enabling many of the advances that we're seeing in technology right now. And the stock has done tremendously well. Apple is another one. We all love Apple. The company has made some of the best products that we love to use, and the stock has done well. It's traded sharply higher. These are just a few examples of the great tech stocks that of our time that we really love investing in. But when we think about tech investing, one of the main reasons that we really love investing in technology is because of the profits they generate. But often, especially if you're retired or you're getting close to retirement age, the volatility in these tech stocks can be such a downside that it maybe doesn't make sense to invest in some of the more volatile stocks that move up and down so quickly because you could sustain losses that take a long time to make back up. So the question that many people start to ask is technology worth investing in because of the risk, because of the volatility that we have? Well, today I want to introduce you to a few of my favorite tech stocks that actually give us the best of both worlds. They give us the opportunity for some serious growth and to be part of this revolutionary growth in technology and in the things that we can do digitally in our generation. Just some amazing things. But also these stocks that I'm going to show you today allow you to generate income and allow you a lot more stability when it comes to investing in technology. So you get the stability and the income and the benefits of a steady company while still having the excitement and the growth of technology like we love it today. I want to show you a chart today. This chart here is a picture of how fast data is growing. And so as we have all of these new applications, self-driving cars, we have tremendous amounts of social media content being built. Companies are putting more of their technology in the cloud and a lot of their data that requires a lot of information to be stored. The size of the global data sphere, if you want to call it that, the amount of data that's being stored is growing tremendously, and over the next 5 years we're going to see even more growth. This sets up a great opportunity for data center stocks, the companies that actually store and process this data for individuals and companies. Now, the opportunities that I'm going to show you today are organized as REITs, or Real Estate Investment Trust. In other words, these data centers, while they're knee-deep in technology, they're set up in a way that actually requires them to pay you dividends and requires them to generate income for their investors. Now, a REIT, or a Real Estate Investment Trust, does not have to pay corporate taxes. And that's a huge advantage to us as investors because there's more profit that is available to be distributed to us as investors. At the same time, REITs are required to pay the vast majority of their profits to investors in the form of dividends. So investing in these data center stocks gives us a chance to generate income from technology, but also because there's so much more data, as you can see, being created, these data center stocks are going to give us an opportunity to grow our wealth at the same time. So there are three that I want you to be aware of and to consider investing in today. The first one is Digital Realty Trust, or ticker DLR. As you can see, this stock actually traded lower during the beginning of the coronavirus crisis, but then it rebounded and has been moving higher simply because thanks to coronavirus, more and more people are working from home, and Digital Realty, along with the other data center stocks, are actually seeing their business grow because more and more data needs to be stored online. Now, Digital Realty actually gives us a 2.9% yield, which is a pretty attractive dividend yield for any company, but they've actually got 15 years of history of growing their dividend. So we expect that 2.9% yield to actually increase over time as Digital Realty pays its investors more. The company has 280 data centers, and they're spread across more than 4,000 different customers. They are expecting to spend $2 billion very soon to actually increase the amount of data that they can process for customers. So that's giving them a chance to grow their capacity, which then will increase their revenue and increase their profits along the way. Right now they're operating at about 86% capacity, so they still have room to accept more customers, but meanwhile they're going to grow that capacity and be able to grow their revenue over time. The second name that I wanted to introduce to you is Equinix, and the ticker is EQIX. As you can see, this has been a home run for us this year, or for investors this year. After a brief dip at the beginning of the coronavirus crisis, Equinix has been trading steadily higher, and it makes sense because they've got 214 data centers with 9,500 customers. So they're definitely spreading a wide net and attracting a lot of customers. Now, Equinix pays about a 1.4% dividend yield, so it's a little lower on the yield side, but they do have a history of growing their dividends. Here's the thing that I think is helping them grow. Equinix is actually committed to generating most of their power through renewable electricity. And many companies actually have a requirement that they need to be socially conscious about all the different areas of their business. And by putting their data with Equinix, they're actually meeting that goal because Equinix is going to be a green source of data storage and helping to reduce companies' carbon footprints. So that just makes them a little bit more attractive to some of these companies that are focusing on these social aspects as well as the business aspects. Definitely a great data center stock to invest in and to participate in this growth in data. And then the final one that I wanted to show you is a little bit more speculative. This is Iron Mountain, ticker IRM. The company has an 8.3% dividend yield. Yeah, you heard that right, 8.3%. That's a really high rate of income that you can get from this stock. And they've actually got a history of 9 years of increasing their dividend. It's something that they're very proud of. Now, because the dividend is so high, there are some questions as to whether the company will be able to continue to pay that dividend. But even if they cut the dividend in half, it still leaves Iron Mountain paying you more than 4%, which is a great yield. Meanwhile, the company is actually making some interesting transitions. They used to be more of a physical storage space. Their name Iron Mountain comes from one of their data or one of their centers that's actually inside of a mountain where they basically have amazing security and could withstand all kinds of natural or warlike catastrophes because their center is so deep in a mountain. That's kind of where they got their name, but they've been moving more towards data storage and participating in this global technology increase. So they've got a very wide customer base. They've got 95% of the Fortune 1000 companies do some sort of business with Iron Mountain. They've got locations in 50 different countries, and right now they're spread across 225,000 different customers in 50 different industries. So they're very well diversified. If one area of the economy doesn't do well, they'll be involved in plenty of other areas that do just fine. So I think that their business will be stable. You could earn an 8.3% dividend yield, which is a tremendous opportunity. And they could be a little bit more speculative than some of the other names that we've looked at, but it's certainly a way for you to participate in this growth in global data. So I hope you enjoyed these three stocks. I'd love to hear what you think about them. Just send me an email at richretirementfeedback@stpaulresearch.com. Let me know what you think about these and the other tech stocks that we're involved in. Thanks. Have a great day.